Jared K here from Instagram. He says, "Hey guys, I listen to your podcast every week and I enjoy the great content you all put out there. I'm a 30-year-old male and I'm single. I currently make $80,000 a year. I have $60,000 in a high yield savings account, $13,000 in a crypto wallet, $11,000 in a Robinhood account, $135,000 in my brokerage account, $85,000 in a 401k that I receive a full match on every week. I have no debt. I'm currently renting, but rates just keep going up. Rent for me right now is $1,700 a month. I don't know if I should just keep renting or buy a starter home, which in my market is anywhere between 180 to 300K. Would really appreciate some insight." Robert, you talk about house hacking a lot. Give Jared sort of the playbook as to what you would do if you had $60,000 in a high yield savings waiting for a down payment here. And he's making great money. He's got a lot of it here. What's the play-by-play for Jared?
Yeah, Jared's crushing it. This is awesome. I love to see someone at 30 years old that has all their bases covered. And yes, I think it's a great idea. You're making really good money. You've got decent diversification. You have your base built. I love it for you to go out and find a duplex, a triplex, or a quadplex, live in one unit, use the Fannie Mae 5% down mortgage, which keeps most of your money in your pocket because you only have to put 5% down. You can buy up to $1.3 million, which I'm not saying you should do that. Keep it in your price range. Keep it in your buy bucket. I like the fact that you're talking about a couple hundred, $200,000-$300,000 property. Do that, live in it for a year, and then repeat and get yourself into the real estate game. I love this for you. And for anyone listening that is younger but has their base built, real estate is the next step to building wealth. So Jared, great job getting where you are today. And I love this scenario for you, and I think you should go for it.
100%. Here's what you got to watch out for. That if you end up getting a duplex, triplex, whatever there, that you have enough money to afford what is the mortgage, right? The Fed is cutting interest rates. We're going to see the rates hopefully begin to come down on mortgages soon. That's obviously not tied to the Fed. That's the 10-year. But I guess what I'm saying is just make sure that you're not setting yourself to be house broke. I'd much rather see you renting $1,700 a month and actively investing in a 401k and a bridge account and a crypto and a Robinhood, like all that stuff. I'd rather you be doing that than paying $4,200 a month. And like, it's just a numbers equation. You just have to run the math. And right now, it's never been cheaper to rent in relation to buying a home. I saw a stat on X a couple days ago that showed the disparity. It's never been higher. So maybe renting right now is the move. I understand your rent keeps going up, but of course, you want to buy something and really settle down roots. I respect that. That's what I've done here in Nashville. And I think it's a great idea. Just make sure you're not doing it in such a way where you're going to set yourself up for failure and not have enough to invest every single month.
And I want to click back on that because you made up a great point, Austin, and that is Jared and anyone listening that is thinking about this strategy, make sure you totally understand the total ownership cost, not just the mortgage and the insurance, the total ownership cost, especially if you're going to house hack. And the way you want to really look at this, once you do have those numbers, is go, okay, let's say you buy a duplex and the total payment all in with everything is going to be $2,800, but you can rent one of the units for $1,400. So then $1,400 they're going to pay, you're going to pay $1,400. So you're in line and actually lower with you're currently paying, and you get to enjoy home ownership, and you get to enjoy the upside of equity and tax breaks and all of the above. So total ownership cost, make sure you understand it, and you understand what the rental amounts are going to be for the units in the building you're looking to buy, and you'll do just fine.